Welcome back to my channel, fellow investors. In this video, I'm going to be reviewing Palantir. This is a software company that deals in big data. They try to find patterns in that big data, which will then give their clients the ability to pick up on that intelligence and act on it. One of their big customers is the military. They use big data sets and try to pick up on patterns that help them keep the country safe. They're trying to move over to the commercial space and sell their solution to businesses who could also use their software. Of course, they're a software company, so every software company now says they're an AI company, and Palantir is doing the same. They are claiming that through AI, they're able to work with large language models and bring value to that customer as well. I'm going to take a look at Palantir. I'm currently not a stockholder of Palantir, and I'm going to value the company, and I'm going to decide whether I should start buying shares in Palantir or hold off from doing so. Let me show you more on Palantir. Let me go over the fundamentals on Palantir. To begin with, this is a $55 billion company, and they're a new company. They've been around publicly traded since 2020, 2021. And if you followed the company, they IPO'd at around $10 per share, and then they really went up in value, up around the $35 range, but really went down. And you could have picked up shares of Palantir under $10 in 2023, at the beginning of 2023, and at the end of 2022. If you had picked it up at the very low point of the stock, you'd be up 300% from that stock price up to where it trades today. So stockholders, especially the ones that bought in late 2022, early 2023, are likely really happy with that return. Overall, this is a high growth company. They're growing at about top line revenue, about 20% per year, but their cash flows are growing much faster, which is really impressive for a company to have free cash flows this early in their young history. Forward PE is 73, which is a little high, and I think they'll need to grow into that PE. But I'll value the company using free cash flows as well as earnings per share. I'm not going to use a 73 PE. I'll use something lower and tell you what I think the company is worth. Most analysts are saying to hold on Palantir. I think the stock price has gotten pretty high and pretty expensive, but I'll see where I value the company, and I'll let you know what I'm going to do with this stock. I'm going to value Palantir by discounting the free cash flows I expect the company is going to produce in the future. And I'm also going to value the company looking at their earnings per share and determining what the stock price ought to be based on their earnings per share projections. To begin with, on the free cash flow side, the company produced really impressive free cash flows. And I'm going to have a beginning point of the 2023 year, and then I'm going to grow that by 25%, which is a pretty fast growth rate, but they did grow their free cash flows over the last 3 years by 47%. The first 4 years, I'm going to grow at 25%. And then years after that, I'm going to grow at 5%. It gives me this particular forecast of free cash flows that I expect in the future. Now I'm going to discount those free cash flows by 10% as a weighted average cost of capital. This is higher than what I would use for like a Microsoft, but this is a small company. They are new. A lot of things can happen. A big competitor can come into their space and take them out of business or really limit their growth. That said, with a 10% discount rate, the net present value of all those free cash flows is $31.2 billion. I'm going to add the cash, $3.6 billion, and they don't have debt. So it increases the overall value to an equity value of $34.9 billion. The market cap is $55 billion. So the company is trading with a 34% premium. That's a pretty good premium on this company. Looking at earnings per share, the earnings per share is a little small. It's 34 cents per share, and their growth rate isn't going to be all that great, but I think they can really improve on it. I'm going to grow their earnings per share by 10% and give them a PE of 60, since they are a pretty exciting company. They are saying the right things with AI, and I think a 60 could be something I could substantiate. Based on those factors, I get a value of $17.39. Current stock price is $25 a share. So there's about a 30% premium if I value the company based on earnings per share. If I combine the two valuations, I get to a blended 33% discount on Palantir. That's a pretty high premium that I'm paying on Palantir. And, it causes me to pause. If it was closer to fair value, I might consider it. And definitely if it was a discount, especially with the execution of their business and the profitability and the free cash flows, I'd definitely be interested in Palantir. Now it's time to decide whether I should buy shares of Palantir or not buy shares. And I'm going to base it on 3 factors: the company, the balance sheet, and the discount. To begin with, I think the company is really exciting, and I'd be happy to be an owner in Palantir. I think they're an industry that I have invested in for a long time and have done really well in. And the company's operated really well. There's no debt, so it's well below 3 times EBITDA. and the balance sheet's in very good shape, but there's no discount on the stock. So you saw where the volatility of this stock has gone. And I think at the right points, this stock may come down to a better valuation and a better entry point. Therefore, I will not be buying Palantir. I would be a seller of this stock. Palantir is an exciting company. They're in a space where they're really doing well. They've grown very quickly, which is impressive. And we'll see if they can keep that growth rate up, especially on the top line. That's been growing at 20%. If they begin to slow down, then it's really going to affect their valuation. We'll also see if they can keep growing that free cash flow at the rate that they've been growing. It'd be impressive if they do. And their valuation will go down if they don't. I hope you enjoyed the video. I hope you found it interesting. And I really appreciate you watching.